Want to get to Jared Blikre. We've got Nike earnings. Jared?
Yeah, Nike getting a nice little pop here, up 3 or 4%. And after I was trading, that is on the basis of some decent beats. Now, here's one of the key numbers: revenue for the second quarter coming at 11.36 billion, slightly higher than the Wall Street estimate of 11.26 billion. Now, when you break it down by geographic region, beats all around from North America, North America, Asia Pacific, and Latin America, as well as EMEA. But Greater China revenue missing the mark. That came in at 1.84 billion, down 20% year over year. Estimate was for 2.14 billion, but some nice outperformance in North America, where that number came in at about 4.5 billion, and the estimate was for lower at 4.2 billion. Now, EPS, the bottom line number, came in at 83 cents versus 78 cents year over year. Gross margin, that beat as well. That's up that came in at 45.9% versus the estimate of 44.2%, also up from a year ago. Inventory closing the quarter with $6.51 billion worth of inventory. That's up about 6.8% year over year and beating the estimate of 6.67 billion. And then ending the quarter with cash and cash equivalents of $10.75 billion. That's up 25% year over year and higher than the street estimate of 10.32 billion. Also want to give you the effective tax rate. That is coming in at 10.9% versus 14.1% a year ago, and lower, much lower than the estimate of 14.5%. And according to Bloomberg data, the street holds 27 buys on the stock, 5 holds, and 2 sells. Finally, want to close with a quote from the report here about their inventory constraints and supply chain channels. Here they're saying Nike Direct grew 8%, led by North America Direct growth of 30%, including record Black Friday week results. And the Nike brand digital, that delivered strong revenue growth of 11%. And this was led by double-digit growth in North America and partially offset by a decline in Greater China. Guys?
Jared, want to ask a quick follow-up here. We often look to Nike as a bellwether stock for strength of global economic activity, given its global manufacturing facilities and consumer base. Is there anything you're gleaning from this report that suggests that some of these concerns, whether supply chain issues, inflation, consumer spending, are stronger or weaker than we saw previously, just based on what we're now getting out of this update?
I'm going to look at some of their key numbers here. I was looking at gross margin. That's something that the street was focusing on. That came in better than expected. So that's going to be a focus on the call, I would expect. And I'm just giving a few of the headline numbers here, so it's not exhaustive. But I would note some of the weakness and reiterate some of the weakness that we're seeing in China. That was a small bit of a disappointment. And it looks like I misspoke when I said they had beat on the Asia Pacific and Latin American revenue. It was also a small miss there. That came in at 1.35 billion. Estimate was for higher at 1.43 billion. But back to your main point, it looks like their margins are holding up. Inventory is doing well. So according to the headline numbers, maybe we're going to expect a nice little pop tomorrow and continue into the close as well.